Hey guys, what's up? How's it going? Welcome to week number 2 of the real estate REIT investment case study series that I've started on this channel. This is a case study series where we will be investing into real estate on a regular basis. This is sort of similar to my dividend investing case studies you guys might know, but the only difference here is we're actually using REITs and it's going to be a 100% real estate portfolio. Now, before we go into this video and we talk about the portfolio and stuff like that, a few things I want to just cover really quickly here because there's been a lot going on. One thing I want to talk about really quick is I want to say thank you to everybody who subscribed to the channel. We just hit 200 subscribers. Really appreciate that, guys. That's awesome to see, and I really love that. Like, that's so cool. So if you guys are watching this video and you guys want to support the channel, hit that subscribe button, click the subscribe. Really helps out the channel and it gives me motivation for doing these videos, and I thank you guys for that. So I want to say that really quickly. So thanks to all you guys for that. Next thing I want to talk about is there's been a lot going on in the market over the past little while, if you guys haven't noticed. The past couple days have been a little bit hectic, and just in case if you guys are watching this video at a later date and time, basically what's happened is the coronavirus, which recently, there's been talk about it for a while, first came out and then it kind of died down, but then recently it just kind of talk about it, it's kind of surfaced again, and it seems like the media is going crazy about it. Apparently it's spreading and stuff like that. It's still hard to say whether this thing is really serious or not, but it's affecting the stock market world in a really big way, as you guys can imagine. So basically what's happening is the virus is it came from China, right? So China's kind of locking down, and a lot of the other Asian countries around there are kind of locking down. So a lot of companies, a lot of stocks are having issues with that kind of stuff. So first it started with China and all those Asian stocks kind of going down, like those foreign stocks kind of got a bit of a dip. But now what's really interesting is like the whole stock market kind of like has basically gone down with it. Like the last couple days we tanked pretty hard, and I think across the board it's been about a 2 to 3% decrease for most people, including myself. Now that did happen a couple days ago, and it has kind of went up a little bit. Like I checked this morning and things have gone up, but I just want to talk about this really quickly because this is important to talk about, and I'll probably do a video later on where I discuss this issue more, but I just want to talk about it because a lot of you guys might be watching this video and you've never seen this or never experienced this before. This is completely normal. This happens all the time. Stocks have been going up a lot for the past year or two. So this kind of market correction, you can call it if you want, is kind of expected. We've all been expecting it to happen for quite a while, but it's just the way it is. So what's going to happen is probably stocks are going to go down. They might go up, they might go down. We really don't know. But the one thing you want to keep doing in a time like this is keep buying, keep investing, and keep going. Look at it as a way to buy stocks at a cheap price. Everything just went down 3%. You now get stocks at a 3% discount. They might, it's hard to say. The next couple of days, things might go up. It might go up over the next couple of weeks, might go up next couple of months, might even take a year or two to go up. We really don't know. But what we do know is that if you keep investing and you keep putting money in, the better you'll do, right? The lower the stocks go, the more you invest, the better you'll get up on top. So that's kind of what we're focusing on. And then that's what I want to talk about in this video, just to show you guys, because it's really important concept to understand. And just to show you guys, I'm going to log into my main Wealthsimple account. This is my main investing portfolio. This is a portfolio that's dividend stocks, growth-based stocks, ETFs, all that kind of stuff. It's just a big mixture of diversification. This portfolio, I want to say about a week ago, was sitting at a gain about 2,000, and I think I was sitting at about 2,600-ish. I'm now sitting at $800. So these small little decreases can have a big impact, but in the end, as long as you buy and hold is what you should be doing, it doesn't really matter. Because yesterday this portfolio was sitting at a $500 return. One day later it's up to 900. So it's like, whatever, guys, it's going to go up and down. There's not much you can really do. That's just the way it is. So if that's happened to you, don't worry, don't sell, don't freak out. Try to kind of just understand that like now is a good time to buy. The hard work and the patience you have now rewards you in the future. And if you guys are brand new to investing and you've just experienced this kind of crash, take this as a blessing, because you need to experience this to understand how stocks work. So it's a blessing in disguise, if you want to say it like that. So I just want to talk about that really quickly before we get into the actual portfolio here. So let's go into Wealthsimple Trade. This is my real estate investing portfolio. If you guys missed the previous video, be sure to check it out, because I talked more about this portfolio, what the goal with it was, and what I was trying to do. Basically what I'm trying to do is buy real estate, diversify my portfolio and my passive income streams without investing too much of my time as in being a landlord or something like that. So I'm buying REITs and real estate based stocks so that I can own real estate, but I don't have to do anything to make money off them, basically, if you want to put it that way, because I'm lazy. So that's kind of what we're doing in this portfolio, and we're kind of testing to see, if we can get some pretty decent returns doing this. So in the previous video, we bought VRE. VRE is a Vanguard real estate fund based out of Canada. It's Canadian REIT. It's about $37 for, it's an ETF too as well, I should add. So I think it owns about 10 of the biggest real estate holdings in Canada. It's like 10 or 14 or something like that. So a lot of well-known Canadian real estate managing companies and stuff like that, and funds and whatnot. So it's pretty diversified and it's pretty solid. So that's the one we bought last week, and we bought that last week. So that's kind of doing okay. Overall, we're down a little bit. We're only down 36 cents. We're only $100 portfolio, so we're not going to go down that much. Yeah, our all-time down is down 36 cents. Whatever. Doesn't really matter. So today I'm probably going to be buying more ETFs because I think ETFs are pretty solid for the portfolio. But once again, I want to get about 3 to 4 ETFs as a base for the portfolio. I don't know if I'm going to I think I want to buy another Canadian ETF, and then maybe I might sprinkle in some US ones, or maybe, I don't know, but I kind of want to make it Canadian for now, and then we can kind of pick and choose some different ones as we go, kind of thing, because the Canadian real estate market is huge right now, and it's really booming, and a lot of people predicting that's going to do really well. So I want to maybe make I'd say 25%, maybe even 50% of my portfolio Canadian, then maybe make the rest US or something. I don't know. This fund isn't gonna be a big fund, so it doesn't need to be super diversified or something like that. As long as I got a couple ETFs, I'm happy with it. So that's what we'll kind of go with. So today we're going to be looking at another Canadian ETF, one that I actually have in my dividend portfolio. So what I'm thinking about doing is I'm going to sell the one in my dividend portfolio, buy a dividend ETF, and then I'll just, kind of focus the ETF in this one, which is XRE. XRE is a very popular Canadian-based ETF, and I've talked about it in my dividend investing case study videos. So you guys, I'll link to that whole playlist if you guys want to check those out, because check that out if you're interested in dividend investing, because we do the exact same thing. The only difference is we're focused on dividend stocks. So I'm going to go XRE here, and XRE is a iShares ETF. It's very solid. It's very good real estate, and you can see even the year-to-date return as of 2020 is up 8%. It's already up 8%. It's only been it's month 2 already. So it's a very, very good ETF. Real estate is booming right now, and you can see the 10-year inception period is 11%. That's pretty crazy. So once again, and it is a Canadian-based, ETF, and we can see the holdings here. Some of these are in my other one, VRE, but some of them aren't. So there's a little bit of overlap when you buy ETFs, but that's okay. It doesn't really matter in the end. You can see all these different. Some of these I recommend, some of them I don't. So yeah, just another different ETF, just another diversification, just another way to change it up a little bit. So we're going to be buying, and it's really cheap too. This is a really nice one. The really nice one about this one's cheap. The Vanguard one was about $40, I think. So we bought 2 shares. XRE is $20 Canadian. So if you're buying it with American money, it's like $15 or something like that. You can buy a lot of shares, and it does pay out monthly in terms of distributions. It's got a pretty solid distribution at, I think, about 6 cents. If you go to the table here, we can see that the total distribution is about 6 cents per share per month. So once again, it is a monthly. I think the other one was monthly too. I'm going to try to get monthly ones, because I want to try to act as if when you were a landlord, you're buying property, you're getting that monthly income. That's kind of what the whole goal of this portfolio is, to get some monthly income rolling in. So yeah, 6 cents per share is pretty solid on a monthly basis. And then they do a big one at the end of the year, which is 22 cents per share, which is almost basically what the shares were. No, sorry, I did the math wrong. Sorry guys, it's a little confusing. 22 cents per share is pretty solid though. Yeah. So we're going to go into BlueStacks here. I'm going to search for, now Wealthsimple was having some issues with the trading earlier, so hopefully this works. We're going to test out and see. And I don't know if it's just pure coincidence, or maybe people are freaking out because the whenever markets crash, people freak out. Guys, don't do that. Don't freak out. You guys are smarter than that. Well, we're all smarter than that. You don't need to freak out. So just don't worry if that kind of thing's going on. So we're typing XRE. So Canadian, this is the one, $20. And I think we're going to buy about 20, 40, 60, 80. So 4 shares I think would probably work. And I'm not going to buy it today because I have to wait for the funding to go in, but it'll go into our personal account here. Actually, we can buy 1 share today. We'll buy 1 share today, and then I'll put the $100 that we put in every week. And then when that transfer goes through, I'll just use the rest to buy XRE. So I'll just buy 1 share for now, and then we'll buy the rest of the shares, and it should go through by tomorrow. There's always a delay, so yeah. So we'll just buy 1 share for now. Let's go 1 share. And then when that other $100 go through to the portfolio, we will stick that into our portfolio. So right now we have, I'm just trying to get back to my home screen. There we go. So that transfer, or that one buy is pending. We have one pending order, and then we have VRE right here. And you can see this one actually took a little dive, but it's kind of went back up and then took another big dive kind of thing. So it's just funny how like stocks that have nothing to do with, you know, way in the world where the coronavirus is going on is, you know, it's just cool how it affects it. You know, it's interesting. And other than that, nothing's been going on in this portfolio. We don't have any dividends because we've only been doing it for 2 weeks. But we might get some dividends at the end of the month. We might get a VRE dividend. I don't know. It depends on if we reach the X dividend date. I'm not too sure. That we'll have to check and see. So this portfolio, we probably won't get any dividends this month. But if we buy a couple ETFs and we slowly start putting the money in, we'll start getting probably, I'd say we get dividends and get the income rolling by the end of March. And March is always a big dividend month, so we'll be getting lots of dividends in March, so that'll be really nice. But other than that, guys, thanks for watching this video. One thing I do want to point out before I'm finished up is if you guys have any recommendation for some good solid REITs or real estate funds, let me know, because I'm not familiar with a lot of them. It's a new area of investing to me. They can be Canadian, US, whatever, I don't really care. Just let me know what you think about some different ones in the comments if you guys want. And be sure to like the video if you liked it. And once again, if you guys want to follow along with these videos, just hit that subscribe button and subscribe to the channel, because I do them once a week. I do the real estate one investing case study once a week, and I do the dividend investing case study once a week, and then sometimes I do some other videos here and there. Yeah, definitely check those out if you haven't already. But that's it, guys. Thanks for watching the video. I hope you guys enjoyed it. Let me know what you think in the comments, and I'll see you guys later.